All right, folks, welcome to the Sunday live stream. We're going to be going over our weekly analysis for the week, primarily focused on the S&P 500 futures and the NASDAQ futures. I think the first thing that we should do is start off with the news. So let's go ahead and pull it up. Hope everyone's had a good weekend. Hopefully you're winding down the right way, looking at the charts, all that good stuff. Let me adjust this music. It's a little loud in my ears. All right. Y'all like the beard? It's freshly shaved. All right, let's pull up the news here. See, I learned from last time. Okay, I'm just sharing the entire screen, not just the window. That way everybody can see the drawings when I'm actually drawing on the chart. Okay, so let's get into this. So I like to just kind of take a glance over the news every single week, like economic events, all that kind of stuff that's going to be coming out this week, because that has a pretty large effect on like what happens to price, especially when it comes to the news that we have this week. We've got CPI, PPI, retail sales, jobless claims. Like all of these are market moving catalysts and can lead to like huge price swings. So you want to know like what time they're going to be coming out at, what time they're going to be released at. That way you're not in the middle of a trade and then you get caught off guard, you're offsides, you lose a bunch of money, or at least like get stopped out of your position when you could have taken profits, things like that. So even though I'm not like a fundamental analyst, I don't dive super deep into like all the numbers and stuff, but I at least like to know like anything that we have coming up because of what I just said. I don't want to be caught off guard. So real quick, if we kind of skim through this, we definitely have a busy week. Like you can see a lot of red dots here. Starting on Tuesday, tomorrow's going to be pretty quiet. We just have a few things, nothing too crazy. But going into Tuesday, we've got the biggest event of the week, which is going to be CPI. If you've been following for the past like 18 months now, CPI has been playing a huge role in the market since people have started to listen to the Fed more and pay more attention to inflation. So yeah, those inflation numbers come out tomorrow, 8:30 a.m. Eastern, so 30 minutes before the market opens, at least the stock market. Then on Wednesday, the next day, we have PPI, and this is very important. This is pretty much like the like industrial and like manufacturing side of inflation. So CPI is for just like your everyday person, how much pain they're feeling when it comes to inflation. But then PPI is more so for like the manufacturers and stuff. So that's really important as well. We've got retail sales coming out at the same time, manufacturing index coming out at the same time on Wednesday, and then a slightly not as important but still semi-important catalyst is going to be the business inventory, and that comes out 30 minutes after the market's open. Then on Thursday, Thursday, really just the main event is those jobless claims. And then Friday, and that comes out at 8:30 a.m., so an hour before the market opens. And then finally on Friday, we have the housing starts and permits, which isn't like a huge catalyst, but still something to kind of keep on your radar. So that's the news for this week. This service is just called Econoday. You can put it into Google. It's the first link if you want to like take a look at the news for yourself. So moving on, let's go ahead and let's close this. All right. So let's get into the charts. Like I said, in all of these analysis, we're going to be going over always the S&P 500 futures and the NASDAQ futures. Even if you don't trade futures themselves, it's good to at least be looking at both ES which is the S&P 500 futures, and NQ, which is the NASDAQ futures. So even let's say if you're trading like Tesla or Nvidia, like any of those larger names, because they're such like they're highly correlated with the S&P and NASDAQ futures, you still want to be paying attention to them. So me personally, I trade the futures anyways, but even if you don't, it's good to be able to like use these in confluence with any trades that you're taking regardless. All right, so let's get into it. So here we are on the daily chart. We're going to zoom in here just so we can kind of get a sense of what's been going on and the overall trend lately. So this past week, we had a ginormous rally to the upside off of these 41.22 lows from the prior week. A lot of folks were very, very bearish down here. There were tons of headlines coming out saying that basically the world's going to collapse financially. So a lot of people were getting short down here at these lows. And obviously, you guys know what ends up happening. If you end up chasing to the extreme of either direction, usually there's going to be so many people offside to one direction that when the market flips based off of the sentiment towards the market flipping, that's going to cause a monstrous move to the upside. And that's exactly what we saw last week. Literally day after day after day, we just had these massive green candles to the upside. We did take a little bit of a breather, but then even this past Friday, once again, had this huge, massive candle to the upside. So many people who were caught short, they entered short way too late. They had to stop out of their positions, fueling the market higher. And yeah, that's the phenomenon that we saw this past week. So in terms of like what setups I'm going to be looking for going into this week and kind of where do I think the market's heading, I think the first thing that we should be looking at, if we come down to this 690-minute time frame, that's a weird time frame. I like to look at this because specifically on the futures, the 690-minute chart, it basically shows like the candles, like half and half of each day. So like if you just zoom in, why is it so big? All right, so if you zoom in, like on this past Thursday, for example, this is the first half of the day, this green candle that I'm kind of circling. This green candle that I'm kind of circling would be the first half of the session. This red candle that I'm circling is the second half of the session. And it just kind of gives you like a nice gauge of kind of like, okay, who's in control in the first half of the day versus the second half of the day. So I'd like to take a look at this chart. But on top of that, this chart also provides some really good zones. As I'm a supply and demand trader, this chart provides some really good zones for us to also take trades off of. They usually are very reliable because they're on the larger time frame. So speaking of zones, let's bring up my main drawings here on Thinkorswim. As you can see right here to the upside, we do have this 690-minute supply zone here. And this zone, the origin of it caused a huge reaction to the downside of pretty much, let's see here, this huge reaction, well, really all the way down to these lows down here. But this is the result of this zone. So over a 200-point drop resulted out of this zone, and we have yet to test it. So this is a fresh zone, and because we're rallying so much to the upside, this is pretty much most likely going to act as a magnet for price next. Big if the bulls are able to overcome this swing high, this previous swing high right here. As you can see, this past Friday, we ended up testing it. We broke just above the high. If I bring up my actual drawing here, we broke literally, oops, there we go. We broke above this high for a few minutes in after hours on Friday after the market closed, but we ended up rejecting. So bulls couldn't maintain value above this high, at least not yet. And this is important for us to keep an eye on going into the week because Let's zoom in a little bit closer. This is important for us to keep an eye on going into this week, because a lot of people are obviously, it's such like this high sticks out, this previous high, it sticks out. Come on. This previous high sticks out like a sore thumb. Everybody's going to have their eye on it. So as soon as we break out above this, a lot of people are going to be aping into longs. They're going to be like, oh my gosh, the market's going to be heading higher. Like, let me get in calls or let me buy shares or like whatever the case may be. A lot of people are going to be entering longs if we can break out above this high. And just like we saw to the downside, when so many people are getting into trades that are kind of like one-sided, lopsided, so many people are in a directional trade, there's opportunity for pain, which will make the market makers money. So it's good to keep an eye out on this high. Me personally, I don't like playing breakouts. I would much rather see the market do something like this, break out of this, come back, pull back into this, and then hit higher up into this 690-minute supply zone that we've been talking about. That's my personal taste. But also, since I've been trading for at least a decent amount of time, a lot of people, like I said, they're going to be getting trapped up here. I'm not saying that we're going to sell off all the way, down and making new lows, but I do think that there will be a good opportunity to potentially get short above this high coming into tomorrow, at least. It's going to be the start of a week. People are going to be itching to put a trade on after the week, after a long weekend and after a huge rally that we just had this past week. And a lot of people are just going to see this breakout after the momentum we've already had, and they're going to jump into this trade. And you can even see here when the market opened, like this dotted line is the Sunday open here. The market opened, we actually gapped up technically. You guys, yeah, it's probably too small for you to see. But if you can see here, we actually gapped up. Like we closed on this candle, we opened here, so we gapped up about not too much, like about a point and a half. We retested this 43, 44, 30 area, and then we were proceeding to sell off right now. And again, that's most likely a result of sellers defending this previous swing high right here, right? A lot of people got trapped, and now, as you can see, the market's starting to pull back. So what areas am I going to be looking for when we're pulling back? First, as you can see, I have this 2-hour demand zone here marked and this 3-hour demand zone here marked. So if we just go to those time frames, you can kind of see where I got these zones from. So I marked off this 3-hour demand right here. As you can see, we had a huge bullish engulfing candle to the upside. We even came back and ended up retesting this zone pretty much to the penny before we had this major explosion for like, I don't even know how many points that is, but it's like 50 points to the upside. And we just ended up carrying that momentum through the end of the day. So primarily I'm watching this 3-hour demand first. We do have this minor 2-hour demand slightly above. I'm not really too pressed about it. I just marked it off on the chart just for context, like just in case we do pull back into this and end up bouncing, like at least I know that it's there. So we could do something like this tomorrow and end up bouncing, but I'm much more inclined and I'm much more watching for something like this instead into this zone and then getting a bounce. So these are the two main areas that I'm kind of looking for if the market does end up having a meaningful pullback. However, like I was saying before, what's up, Samaj? Like I was saying before, the main thing that I'm watching for is if we can break out above this and either A, do one of the scenarios that I was just talking about, trap a bunch of longs up here in this area first before we end up making a move down for an opportunity to play short, or we'll end up doing something like this, where we again break out, end up pulling back, holding this area, right, that Friday close, and then for a rally higher into this 690-minute zone up here. This zone up here also is important because if we, let me give you guys some more context here. If we not only look at the like major supply and demand zones, but we also look at key levels, we can also see that inside of that 690-minute zone, there's also this key level at 4487, which is right just shy of 4500, which is a psychological level. And as you can see here, all right, as you can see here, we had a rejection of the level, rejection. Of course, levels aren't always going to be perfect, so we ended up breaking through like a little bit here. And then we ended up reclaiming it once we broke back below. This ended up becoming support once again, almost tested it here, support once again right here, a little bit more games, and then finally we got that massive sell-off that originated in this area. So the reason I'm looking at this zone is not only from that 690-minute supply at 4485, but also that key level at 4487, which is inside of the zone. And again, we also have that 4500 psychological level up there as well. So if the market does manage to head higher and bulls are able to maintain their strength to the upside, that's the level that I'm gonna kind of be watching for. Like if I am given an opportunity to take the market long, if bulls are able to prove themselves above this previous swing high up here, if bulls are able to maintain value above this level, I'm going to be looking for longs, and I'm going to be targeting that 44.85 level up above. Will the move happen in one day? Who knows? It could, especially with the moves that we've been seeing lately. But again, we just have to see. Our job isn't to predict the market. It's just to have the areas kind of mapped out on the chart, have our context, and then when price makes certain moves that are areas of interest, we're going to gauge kind of what the reaction is there, and then that's when you put the trade on. So yeah. Finally, to kind of wrap up with the S&P, if we take a look at the Fibonacci level, this essentially, I don't use Fibonacci a lot. I only like to use it on super large reactions like we just saw this past week. So again, pretty sure it's the time frame. So again, as you can see here, we had this massive rally off of that 41.22 level, just huge euphoria. And so typically what you want to see after large moves like this is, if it's whether to the upside or to the downside, in this case is to the upside, typically what you want to see is if we do end up pulling back, you want to see, let me pull up the drawing. What you want to see typically is for bulls to defend this 50% retracement line, because that's the halfway point. So in order for bulls to stay in control, you want them to defend this area, because that means basically like, okay, we're in charge of at least 50% of the move. So as long as we maintain above this 42.78 area, that means that bulls are trying to prove themselves. They're still trying to stay in the driver's seat, and there's a good chance that the trend will end up heading higher. But this area down here, this 42.78, is about 150 points away. So we could get there this week, who knows, anything can happen. But if we do end up pulling back at some point and this rally does end up cooling off, this 50% area is definitely in something that you want to keep an eye on. And the thing is, the higher that this rally goes, if we do continue higher, like let's say the rally continues higher up into that 4,500 area, 44.85 to be exact. That's the start of the supply zone. If we continue higher up there, as you can see, the 50% retracement will like continue to go higher as the rally continues to go higher as well. So just another thing to keep in mind. And just in case any of you guys want to kind of like use this trick in the future, basically Fibonacci levels, you want to use them like this. So if we have like a huge drastic kind of, I guess, like swing low or swing high. In this case, we had a massive swing low down here. So you want to take your Fibonacci level on Thinkorswim. You just go to the drawing tools. And then if you hover over this percentage icon, it'll say Fibonacci retracements. So you can just click on that and then click on that like bottom point down here and then draw it up. Now, the thing about this is you wouldn't have wanted to mark this zone if we didn't end up actually taking out this previous high. Like it only is relevant if we took out this previous high, which technically we did. So that's why I ended up drawing this zone, or drawing this Fibonacci retracement. But say instead the rally had only gotten up to like right here, and we never actually took out this high up here, then this wouldn't be like a valid Fibonacci retracement. So you always want, like whenever you're using this, you want to use it on like pronounced areas. So like this right here is a new swing low, like relative swing low. Of course, there's like, you know, some activity all the way back months and months ago. But if you zoom out, right, we ended up making a new low. Oops. We ended up making a new low here, and then this new low. So that is what makes this valid to draw like the bottom of your fib retracement. And then same thing here, right? This was a previous swing high, we broke above it, and now that's what makes this valid, like to draw the line from this bottom down here to this high up here. I hope that makes sense. All right. So those are the setups that I'm kind of watching on the S&P 500. Again, just to kind of recap, I'm going to come in here to the 5-minute chart just so we can really get granular here. Actually, let me do the 30-minute. And let me put my zones back on. All right. Okay, so what am I watching? One last time. First thing that I'm watching for is for a move up into this zone, sellers to become trapped above these highs somewhere in this area, and or not sellers to become trapped, buyers to become trapped above this high, right? People aping into calls, buying shares blindly, thinking that the market's going to continue up forever. And I'm looking for us to have a failure on this rally for a nice pullback. Yeah, that's the first scenario that I'm watching for. I always like to kind of keep an eye on the contrarian scenario, especially when we've had so much momentum in one direction. And as you can see, we're already selling off. So we might get this move overnight. Who knows? But that's what I'm watching for going into tomorrow to the downside. And of course, those targets, both of these demand zones down here are pretty far away. So I'd most likely want to trim targets starting at like, let's see here. It looks like we kind of had like some consolidation right here at this 44.15. So you could scale out there. Of course, 4,400 even, a nice psychological number. And then maybe like leave like one last runner into like one of these demand zones, something like that. So that's for the downside plan going into this week. Now for the upside plan, of course, that one should be pretty obvious here. There it is. All right. So for the upside plan, what we're looking for is, again, we want to see aggressive buying and aggressiveness from the bulls. We want to see us have a pullback into this 44, 30, 35-ish level. we want us to hold, and then finally more aggression up into the upside, and this 44.85 supply zone will be a great area to take targets. So about 55 points higher if we do end up getting that pullback and we end up holding. So those are pretty much the two scenarios that I'm looking for going into this week. We have no idea if they're going to play out or when they're going to play out, but those are just something to keep an eye on. All right. So let's move over to the NASDAQ. And honestly, the NASDAQ is kind of presenting similar opportunities. Like it's the same thing, not same thing, but it trades, pretty similarly to the S&P 500. So I'm going to move kind of into this or through this a little bit faster. Oops. All right, this is actually perfect. So I can just redraw my Fibonacci level for you guys to just kind of explain the concept a little bit further. So again, we start down here at our most recent swing low, draw it up to that most recent swing high, which would be this 15,612, and boom. There's our 50% area. So if we do get a meaningful pullback on the NASDAQ, this is the area that you want to be paying attention to. Sure, we can pull back into any of these areas and we can bounce even higher. It's possible, but the one that's the most important to pay attention to and the most important for bulls to defend is this 50% retracement area right here. All right. Now let's talk about those supply and demand zones. So again, we have our 2-hour supply up here, which is pretty much the equivalent of the S&P's supply zone. Let me go to a different time frame real quick. 2 hour. All right. So we have a similar supply zone as the S&P 500. As you can see, we had this massive drop, which led to several over 1,000 point sell-off on the NASDAQ right up here. NASDAQ has been the stronger name throughout this week since it is mostly the tech stocks have been leading the market higher and the NASDAQ is primarily tech. So NASDAQ has had that relative strength as opposed to the S&P. So as you can see, we're much closer to this zone than the S&P is to its. So the important thing to note about the NASDAQ specifically is since it is closer and since it is the stronger name, if the NASDAQ gets up here, and it starts struggling at this area, since it's the stronger name, like that's something to pay attention to. If the stronger name isn't able to have continuation to the upside and the bulls aren't able to maintain their dominance to the upside on the stronger index, then that most likely means the lagging index, the S&P 500, will also end up pulling back too. So that's why it's important to keep an eye on multiple names. Even if you're not trading multiple things, you're only trading one instrument, like you still want to be able to keep an eye on the overall market context, because these are things that can kind of give you even more of an edge if you're kind of paying attention to them. So yeah, I personally, again, I want to see us pull back similar to the S&P into this previous swing high or the previous day's high that we had on the NASDAQ, pull back into this, bulls defend it, move higher up into the supply zone up here. On the flip side, if people are caught off guard and a bunch of people are just aping into calls at the open and we start really pulling back here, and let's say that we end up rejecting this then on like a back test or like on a relief bounce, and then we get this move further, definitely going to be open to shorts targeting this 3-hour demand down here, both of these 3-hour zones, and this the last Friday's high, because where do I get this last Friday high level from? If we come over here on the chart, this is where the previous weekly candle closed, exactly right here at this wick. And as you can see, ever since we closed here, it's pretty much been serving as like a key level going forward, right? We got above it. As you can see here, this candle's wick serves as support, and we end up moving higher. We pull back into it again right here, ended up moving higher. So that previous candle's close from last week is also a key level, at least in the near term, until it's no longer respected. So that's something that I'm going to be looking for as well if we do end up getting a pullback on the NASDAQ into anywhere in this area. All right. I would say I think that's gonna kind of wrap it up for this live stream. We're about 35 minutes in. Don't want to keep you guys too late. Like I said, I was pretty thorough on the S&P 500. NASDAQ's pretty much mirroring it. So don't want to regurgitate all the same information. But those are the setups that I'm watching for this week. If you need to go back, rewind, pause the video, look at the charts, anything like that, totally fine. If you have any questions about any of the setups, or if you're watching anything yourself, go ahead and leave that in the comment section, and I'll be sure to take a look, answer that question if it's a question, or just take a look at your setup if you have anything interesting that you're watching. I hope you all have a good trading week. Remember to stick to your rules, be disciplined, be patient. You all know one of my favorite things I like to say: I will be patient because I know the pain that not being patient brings. And I will be disciplined because I know the pain that not being disciplined brings. So we've all been there. We've all, faced the mental pain, at least, that not following your rules, can bring. And so us as traders, it's our job to kind of be the ones in control. We can't control what happens in the market. We can't control if the market rallies, if we get left behind in a position, anything like that. Appreciate it. Yeah, definitely we can't, control a lot of things, and the market is not perfect, but we as traders, we can be perfect. We can choose to stick to our rules. We can choose to be patient, all of these things. So yeah, I'm just going to leave you guys with that. And I encourage you, to just channel your best self as a trader. We all have it in us to make money. We all deserve to make money, but at the same time, it's up to us to execute. So with that being said, I'll leave you all to the rest of your night. Have a good week. Good luck trading. I'll see you guys next week in episode 2.